Welcome to Columbia Business School, the very center of business. Welcome to the next level of you. The Columbia MBA is more than just advancing your career. This is about honing your unique leadership style, bringing your visions to reality, and delivering them to the world. You will be the leader you want to be. You will be able to walk into a room, any room, and solve. Welcome to New York, the global business hub, where startups get their start, business thrives, and game-changing strategy gets put into play. You will have direct access to today's influencers, the entrepreneurs of Silicon Alley, the wizards of Wall Street, the trendsetters of Fashion Avenue, the agents of change. Welcome to a network, a family of over 42,000 alumni. Let the collaboration begin. This is not a sit and learn environment. This is grab the reins and lead. You belong here.
Live streaming from Columbia Business School in New York City. My name is Joseph Zhang. Welcome to the third session of Columbia China Business Conference. In a 30-year-long journey, China has unveiled the second largest capital market globally. Looking back, what are the unique attributes and key challenges of this fast-growing market? Looking to future, what are the potential opportunities and challenges? Joining us today are Mr. Fred Hu, Mrs. Weston Christianson, Professor Gao Xiqing, and Mr. Wang Boming. Unfortunately, we have been told that Dean Mary Jano is feeling unwell and won't be able to join our discussion today. Let's hope she gets better soon. Meanwhile, I'm sure there is a lot we can learn from other panelists today with the extra time we have. Mr. Fred Hu is the founder and chairman of Primavera Capital Group, a China-based global investment firm. Prior to this, Fred was chairman of Greater China and a partner at Goldman Sachs. Mrs. Weston Christianson is the co-CEO of Asia Pacific region and the CEO of China for Morgan Stanley. Before Morgan Stanley, she also served as an associate director at the Hong Kong Securities and Futures Commission. Professor Gao Xiqing is the Hongtian Chair Professor at School of Law at University of International Business and Economics. She is also a former president and Chief Investment Officer of China Investment Corporation and former Vice Chairman of China Securities Regulatory Commission. Mr. Wang Boming is the President of the Stock Exchange Executive Council and Editor-in-Chief of Caijing magazine. Professor Gao and Mr. Wang have played instrumental roles in the initial formation of China's capital market, and all our panelists today are deeply involved with it. As moderator of the session, Mr. Wang will lead us to develop more insights into the history
Recording
and future
in progress.
of China's capital market. Mr. Wang, please take it over.
Welcome the audience. Welcome to this CBS China Business Conference. And thank you very much for participating. Thank you all our panelists. A few months back, last year, actually in December 1990, Shanghai Stock Exchange, Shenzhen Stock Exchange were both established, and of course we know the Shenzhen Stock Exchange announced its opening on 1st of December. And Professor Gao will give us some behind-the-scenes stories about that opening. Officially, Shenzhen Stock Exchange started an opening. Actually, it was opened on the 1st of December in 1991. So now it's been 30-year anniversary since the Chinese capital market was established. And we are gathered here today to have a discussion on the past, present, and the future of China's capital market. So the first question I would like to ask Professor Gao. 30 years ago, the capital market was very different from that of today. And December last year marked the 30th anniversary. And also it's a 10-year anniversary since the economic and capital reforms have been implemented. So many of the implemented measures have just started to play a role. So I would like to ask you, Professor Gao, why China decided to establish the capital market? Because back then there were not even a shareholding company. So what you can remember, what was the most difficulty and the challenges 30 years back? What was the most difficult and what was the major challenge back then? Actually, Boming knows this part of the history very well, and we worked together to really make an effort to make it happen. Looking back, we do believe there were a lot of technical barriers, but I think, just like what you said, Boming, and bring up the fact that we want to establish a shareholding system. It was something that we were not even imagining that could happen, because capitalism was known to be something so dirty, and that's the education that we've received about capitalism. So back then we thought we're gonna do shareholding system. It was unimaginable, and the companies in China back then, most of them were state-owned companies or collectively owned companies, businesses. But regardless, there were no private businesses 30 years ago. And after open up and reform policy was introduced, and there was still a very blurry line. They say if you hire more than 8 employees, then you are in capitalism. You are a capitalist. So back then, the privately employed people tend to be your family members and relatives. So it was really something very sensitive back then to talk about shareholding system. And then we came back to China, and but back then, still a lot of people believe that shareholding system was something very serious. So me, together with Boming, and we went to so many different parts in China and talked to many state-owned companies. And the general managers of these state or chairman of these state-owned companies back then, they talked with us. I talked for about 40 minutes, but after listening to me, they said, don't even try to create capitalism in here. And they were very defensive. And one of the general managers opened the drawer and took out an appointment letter from the government. He said, check it out. This is signed by the government, and I'm appointed by the Communist Party. How can I do anything related to capitalism? Although there were a lot of senior officials back then, they were very open-minded. Though they had concerns and there were things they didn't understand, but they were willing to hear what we got to say. But still, there were a large number of people that were very sensitive about this. So this was a very big challenge, and we've put so much effort in this. And we compiled a booklet, and it's about the capital market. of Marxism and Lenin, and we just wanted to show that the capitalism system itself is not something bad in nature. It is just a tool. So we created the tool theory. It's a tool, so it's like a gun, and if the Red Army takes hold of the gun, then the Red Army can kill the enemies with this gun. So it is just a tool. So what you are saying is that the biggest challenge back in the 90s was to break away from the ideological barriers. And now when we look back, the establishment of the capital market happened because it helped to reform the companies and the businesses in China back in the 90s, because back then 90% of these public economy or sectors were converted to be a more diversified entity, because back then there were no company laws, there were no security laws, and the joint stock system reform or the share system reform had to be approved, for each individual company to go through this reform, because back then there were not many share system companies. In Shanghai, there were maybe 8, and in Shenzhen, there were 5. Both cities' markets combined were only a dozen of these share system companies, but now there are already more than 4,000 listed companies. So in nature, is the company and business reform that was the major drive for the establishment of the capital market. I think these are 2 things. First, like you said, it's the process of companies going through this reform, changing from state-owned or collectively owned businesses into a more modern company governance mechanism with very clear rights and obligations, and very clear mechanism. And on the other hand, from the government authority level, these government bodies that we try to lobby, like the People's Bank of China and the Finance Administration, and most of them were running on the original systems and mechanism of publicly owned system, and their money were all from the same source. Everything was planned. And back then, they say there were banks. They were called banks then, but they were not banks in a real sense. They were just telling organs of the financial administration. It's already planned how the money is going to be used, and they just responsible to implement that. Now banks have much more autonomy than 30 years ago. And what we were trying to lobby was very attractive to some of those very visionary officials from those government bodies, because we were really trying to experiment and try to get finance and funds to better performing companies, and the not so good performing companies will be punished. And of course, there had been problems with the original system. And as this shareholding system was introduced, we started to see the benefits. the arrangement of the capital and also the incentive mechanism was really playing a role. And on this side, we were also seeing this important role that the capital market was playing. So the original 13 companies and also a few companies in Chengdu, Wuhan, and Shenyang, and some other cities, these were all pilot companies, and they were for experimentation only. And no big state-owned companies was selected for the experiment. Only some smaller ones were used as pilot companies for this new system. I think this is Chinese people's wisdom. We try to feel the waters and to make sure that it really works before we roll out. And so we studied abroad. We studied the economics as well as the legal aspects in the Western countries. And we thought that we need to adapt what we learned into the Chinese market, and we need to do it step by step. Because actually 3-4 years afterwards, we're already seeing huge change. Government at all levels, academians and businesses, they all realize that the shareholding system is so vibrant and is something that we can really implement. Then in the mid-90s, the large state-owned companies started to reform as well and enter into this shareholding system. And I believe Fred and Song Wei were all very much involved in that process.
Sure. It's a great pleasure to be here. As Xiqing and Boming already mentioned, I think in the early stage of the Chinese capital market, that there are lots of challenges and the excitement, and after 30 years, the success is mind-boggling. And the thing that I would like to emphasize is that, as we already talked about, if you think about the Chinese capital market, in fact, we're talking about two markets. We're talking about the domestic markets, which include the stock exchange in Shanghai and also Shenzhen, and largely engaging in activities of trading A shares, and that is the shares that are denominated in renminbi, but also the H shares, and that includes the shares that traded in Hong Kong, US, or UK, denominated in foreign currencies. I think this is a very unique characteristics of the Chinese capital market, because for a good, large, high-quality company that they can engage in fundraising activities in these two separate markets, you can do two IPOs either simultaneously or sequentially, and to access two buckets of capitals. And because these two markets are distinct, and also they're not fungible because the renminbi is not fully converted. I think this this is actually looking back in the early 90s when under the leadership of Zhu Rongji and a lot of lobbying efforts of Xiqing, Boming, and including officials like Wang and Zhou Xiaochuan, a lot of people were lobbying for this outcome, which in hindsight is absolutely brilliant. It's brilliant because as China is forming its capital market and the market participants, be it investment bankers, be it lawyers, and be it accountants, they are obviously new to the market. They don't have the experience, and most importantly, the standards are being formed and still at this early stage. So therefore, these overseas listings that happened in Hong Kong in particular, which the first batch started to launch the first 8 companies, and Qingdao Beer was the first company that got listed in July in 1993. And that was actually a huge success. And following that success, China announced the second batch, including like 22 companies that are actually to be listed in Hong Kong. In January 94, they announced that. So now Hong Kong has become the home market for overseas listing of the Chinese companies. And I think this process is actually very helpful for both domestic market development as well, because these companies from China, they are incorporated in China. So therefore you need Chinese lawyers and Chinese accountants and Chinese bankers. But the listing have to follow the rules and the requirements of Hong Kong, New York, US, or London stock exchanges, as well as security laws. So therefore you need the foreign lawyers and accountant as well as bankers. So therefore, even though this overseas listing has a very obvious purpose of providing additional funding to the Chinese companies, but I think equally important is the thing that Boming talked about is to establish the governance, the proper governance standards, and for the issuers and through the intermediaries, and so that they can establish, international acceptable governance, risk management standard, and become, more competitive on the global scale. So therefore, we're talking about effectively a fast and efficient transfer of financing technology. I think this is in this kind of a context that actually, Morgan Stanley is playing a very important role, because we were here in 1994. And we're one of the first banks that actually started, our China operation in both Shanghai and Beijing. And I joined Morgan Stanley after I served 5 years at SFC, working closely with Laura, with Tony, and with also Xiqing and a lot of colleagues from CSRC and the stock exchange in Shanghai and Shenzhen, as well as Hong Kong, to form this kind of a regulatory framework for the H-share listings. And it was not easy. I think it was not easy because at that time, there was no company law. There was no securities law in China. So how can you really regulate the behaviors of listed companies and also impose obligations for them to protect the rights of the investors and the shareholders? I think it is one of the ingenious creations that's done by CSRC and the joint effort, and also the Hong Kong regulatory authorities, the Hong Kong SFC and the Hong Kong Stock Exchange, is to create this articles of association. Is based on a contract law principle. We imposed on any companies to be listed in Hong Kong to have the articles association, and which contains many provisions, are the key governance provisions of a typical company law that we see outside China. So that is a very expedient and a very clever way of filling the gap and make it work. And so that practice was very creative and very, very effective. So with this framework, obviously the market has developed so fast, and China now, at the beginning of 90s, was 500 million US dollars market cap at the earliest stage, and now is 15 billion. So therefore, I mean, the market is second largest already. I think Morgan Stanley also in the early stage, we have a Beijing representative offices, and our job essentially was just to manage the government relationship and also get to know our clients, get to understand the lay of land. And then later we had the opportunity and very fortunate to form a joint venture together with our partner, China Construction Bank, in the first joint venture, foreign joint venture in China, and that's CICC. And that experience was extremely beneficial for Morgan Stanley because it enabled us to really have a first-hand knowledge of understanding how the investment banking business was conducted. In those days, it was largely investment banking business, and have a really understanding of the talent pool and the regulations and how market functions. And also, I think we try to contribute. We trained during the time we are shareholder to 2010. We have trained every year 13 senior bankers in New York. So we're trying to add value. We transfer technologies in terms of risk management and the governance and into CICC. So it's a very mutually beneficial experience. So in the end, I think this effort has been very successful. We are pleased with our top position, both for overseas listings as well as our good league table for our domestic security business. We have raised about $400 billion so far for the past 26 years in 27 years in China and from the equity market, and $580 billion from the MA market. We found extremely fortunate to be able to have that kind of success as we play along in this big market.
I have more questions for you later. We know Morgan Stanley in the very early days in China's capital market was very active. As you mentioned, the CICC was established. At that time, it was the first joint venture investment bank in China. So later I will ask you more questions regarding corporate. And now my next question is to Mr. Hu. In your very early days, I know you used to work for Goldman Sachs. At that time, there were two major players, two major investment banks. One is Goldman Sachs and the other is Morgan Stanley. And you, for Goldman Sachs, were the president in China area, and you helped a lot of China companies get listed. We know in the 1990s, we just started the reform of shareholding structure, and a lot of China companies for like the operation of a shareholding system, about the overseas market, how to improve the corporate governance. The Chinese companies had no idea at that time. And speaking of law, like the securities law, it came to place in 1999, and in 1993, we started to have a corporate law. So, for Mr. Wu, can you please share with us at that time when you helped China companies get listed, what were the problems you encountered at that time? I know there must be tons of problems. So, coming up to your mind, what were the most difficult challenges when China companies started to go to the market? Thank you, Boming. In China capital market, I am a witness and also a participant. And after listening to other panelists' comments, it was very impressive. You know, today China's capital market is the most eye-catching and most important capital market in the world. But 30 years ago, the start was very difficult. The capital market we know today was established through a lot of difficulties. So for the policymakers, the planners of China's capital market, the explorers of China's capital market, including Boming and Sun Wei and Liu Hongren, Qing Wei, Liu Xiaochuan, and the premier at that time. I mean, these people had great vision and were there to reform and explore. They created China's capital market from non-existence to existence, from being small to being very big and highly influential. So I need to say thank you to all of you here and extend my appreciation to the early stage reform advocates. I salute to your effort. Even in today, throughout the world, we can compete in many aspects with America. But nothing has come out from nowhere. It is a fruit because of the very avant-garde spirit of the reformers and explorers. So when we look back to the past 3 decades of China's capital market, I think this is a very important experience. And coming back to the 1990s, at that time, the Shanghai Security Exchange and the Shenzhen Stock Exchange were established. At that time, I was overseas, and the news was very exciting. And I wrote an article I call the stock exchange a lab tube baby of China's reform and opening up. Because China used to have a very traditional planned economy. And at that time, people viewed this thing as capitalism, but we call it as a tool. So China started to have capital market. It's very good for the reform of SOE and also very helpful to create, at that time, the non-existing private market. So when we look back from here today, great achievements have been made. And as international investment bankers like Goldman Sachs, you know, it was such an exciting thing to see China started to build its capital market, and we had great expectation for it. It's the economic dividends, especially after the trip to the south from Mr. Deng Xiaoping. And after that, China became one of the fastest growing booming markets in the world, and there was reform and opening up. There were a lot of heated areas. So for Wall Street, there was great expectation, and everybody was so motivated to participate in China's market, to assist China companies to get reformed, to go IPO, to get fundraising, to go overseas, to introduce global market to China. So they wanted to play a role as a consultant or a bridge So Madam Sun Wei shared with us her experience with Morgan Stanley, very clear. At that time, the market was very closed. So foreign capital's participation started from China companies going to Hong Kong or going to overseas to get listed. So they started to employ foreign consultants. So at that time, there was a B stock market here in mainland China. And it was very complicated with a lot of restraints. So this was my experience at the time because it was an emerging market and China has different practices in a lot of things. For example, IPO today is a very standardized and very simple technical issue. But at that time, if a Chinese company, for example, PetroChina or China Mobile, if it wanted to go IPO, it was more than the job for an investment bank. First of all, it was a job for economists because it concerned a lot of macro policies. And also it involves like consultancy work, like done by McKinsey and BCG. And then it came to an investment bank. So everything needed to be done at that time. It was the difference at that time. If you want to go to IPO in China versus in America, it took much longer time with much more workload. But, speaking of this difference, I say it was very challenging and very exciting. So thank you so much for your sharing just now. Very impressive. So let's give the floor to Madam Sun Wei again. Can you please share with us one example? For example, in the 1990s, you helped a Chinese company get listed. For example, you can share with us an example, concrete example. Exactly as we mentioned by Fred, it was not a standard market at that time. There was a lot of babysitting job. So can you please share with us back then when you did IPO for Chinese companies, what kind of challenges or difficulties did you encounter at the time?
Yes, that's actually a great question. In the early days that Morgan Stanley, are very fortunate to be engaged in the privatization initiative of the Chinese government. So our client was Sinopec. So Sinopec is one of the largest SOEs in the oil and gas industry. And it's a very Chinese in the sense that actually when we start to look at the company, it has 2 million employees, 2 million. And it assets, it's like a community. The assets actually it includes hospitals and schools and kindergartens. It's very different from the typical U.S. companies that we typically work with. And so the first thing first is to restructure. So the restructuring effort is really huge, and we work side by side with our joint venture partner, CCBC, and Levin Zhu was personally involved in that transaction, and actually took the entire 18 months to get the deal done. And also, in order to do a successful listing, we have to change some of the policies. Because at that time, the crude oil pricing is subsidized, is not actually linked with the international standard, and the pricing later it opened up. So then companies start to purchase oil with the global oil price. However, in the downstream, the gasoline price is still subsidized. So therefore, you spend a lot of money buying the crude oil, and then your product cannot be sold at a higher price. So therefore, those price has to be opened up and linked to the market. And that's a huge policy change. And at that time, there were demonstrations of taxi drivers as a result of that policy change. But I think credit to Premier Zhu Rongji at the time and the Planning Commission at the time, they call that this was done. So it does involve, as Fred mentioned, so one IPO is actually involves policy changes from the very top. And also the other thing that I think it is really unusual is the diligence. You can imagine the size of a company of a Sinopac, and there was no digitized data. So therefore, when we're doing diligence, and especially the content, we're talking about using trains to carry documentation. You have a truck full loads of documents involving thousands of intermediaries to process that transaction. I think that is also extremely difficult, but we're very proud that actually it is a tri-listing. So far, it's the only tri-listing. It's listed in Hong Kong, US, and London, and over $3 billion US, very successful. But that experience, I think, is very telling about the determination, not only the challenges, but also the determinations of government officials and the CEO Li Yizhong, Chairman Li Yizhong, and Wang Jiming, their leadership to spearhead and against all odds to make it happen. Extremely, really admire their courage.
The first 10 years, that's the first 10 years of the security market. I mean, I have a few things to add. Okay, what Ms. Sun has shared was very interesting. When I was visiting the US SRC, and the US SRC had a questionnaire about the Sinopac issue, and we read the questionnaire. So I went to the US Security Regulation Commission, and there was the vice president, and there were also over 30 petrochemical engineers, and they read all these paperwork that we submitted. And they were saying there are indeed things we don't understand. Just like Sumi said, for the second questionnaire, there were more than 120 questions. They said they have never seen such a big society. It's not a corporation. It's so complicated. So pricing was so difficult for them. What they cared about is if the US investors would understand all these paperwork and information. So both sides have learned a lot. The Chinese companies learned that we need to leverage the modern governance system to make sure that our numbers and facts are easy to understand. And the US side learned more about the Chinese society and will make it easier for Chinese companies that want to do IPO in the US in the coming years. Fred, you also have things to add, right? Yes. I also would like to share with you our case. We were helping a Chinese company being the underwriter for their IPO. We had a huge team doing DD. Most of them were from New York, and we're all Americans, and also their board chairman and CEO were all there, and they were discussing the financial reports. And the CEO asked, "Which one do you need to read? We have many financial reports." And he was so honest and genuine when he was looking at all these Americans. And these people from the US were really shocked and surprised to hear that question, because the capital markets looked so mysterious to the Chinese companies, and they would like the Chinese companies to present the very authentic and real and detailed financial statements and reports. But the Chinese side was really honest, and they didn't know what really was required. And there was also a former ACA official who was involved in this DD work. So what this story tells us is that back then there were no rules, and there were some accounting rules from the accounting and the financial department. PwC, no, it's KPMG was hired to help with this case. And this company was very small, but now it's already Fortune top 500. It's top in its industry. So this shows that the Chinese companies really started from scratch, knowing nothing about the capital market, and they've developed and grown to be successful publicly traded company. I think the examples you have shared tells us that when the capital market first started in China, people as well as companies had minimum understanding of what capital market is. Well, standing today, when Chinese companies try to get listed, they are acting much more mature. And so that part was about the really early days of Chinese capital market and 30 years history. And there was only a dozen companies. Now there is more than 4,000 listed companies in China. There are over 5,000 listed companies in the US. For us, is over 4,000, and our market cap is about 10 trillion, and US market cap is about 15 trillion US dollars. So there's still a big gap. So in the 90s, or at the early days of open up reform, in China, all the financing was supported by the banks. Back then, 99% of the financing was from banks. There were no other financing channels. 30 years have passed. And for our financial system, there is bank and there's also the capital markets when it comes to financing. Capital market provides long-term fund and bank provides short-term liquidity and cash. So today, we are still facing a problem for our financial system. With the size of capital market we have, 10 trillion US dollars and 60, 70 trillion RMB, but still the share of market cap is much smaller than that of the banks. Long-term bonds and IPOs combined is only 30% of the financing provided. So 70% of the finances is still from the banks. And we think that it's not very well balanced. Bank is a much important role and share than the capital market. So that's the current status quo of the Chinese market. If we look at China as a company, it still has a very high level of debt with very low level of equity. That being the case, I would like the three of you to share with us your comments, and we would like to ask the Professor Gao first. You remember when we tried to lobby about the capital market, and the bank's first response was also the money moved from the bank to the market. This is not allowed, should not happen. And today, it makes every sense for the money to move from bank to the long-term capital market. But still, it's not quite there yet. What is your comments on that? I think it depends on which perspective you are adopting. If we want to really leverage the benefit of socialism and to centrally plan the economy, then that's one story. And I think more people in recent years are believing such because we see all these problems and messes of the capital market in the Western countries. Of course, using one system to manage is much easier than using two systems to manage. So it's probably better to just rely on the banks. One of the controversies back then was that should the central bank control the capital market, or should the CSRC manage and control the capital market? And the central bank, of course, said that it's our job to manage that, and we can just do the pilot, and maybe in 100 years, there will be 100 listed companies in China. So that was from the bank back then. And there was no wrong when you look at the management side of things. But if we look at China as part of the international market, as part of competition, then that is not sufficient anymore. And in the almost 100 years in the past, we've noticed and realized that just the banks are not going to work. So far, the Chinese market management and control mechanism is still somehow reliant on this planned economy. We use rule of law to supervise and manage, which is the right thing to do. But looking at the macro level, there are still a lot of limitations of this whole management and supervision system, especially in who should be listed and who should not be listed. Now we have the registration-based IPO, which is being promoted, but this will take time and until we fully reach and open up. This is to do with the public management system China has. And if it's fully opened, there will be problems. And if problems arise, and then the CSRC will have to be responsible. Therefore, the CSRC will need to control the time and the pace of IPO listing. And for the capital market, especially the mature capital markets, it has taken them also hundreds of years to achieve where they are. And they will, of course, bottom up and how it all reflects the negative list. Whatever is not stated as illegal, you're allowed to do it. And only when they encounter all these problems, and they have the regulation commission to regulate. But for us, it's more top-down approach. And of course, for the regulator, they want to have strict regulations, to better control. So it's going to take more time and more learning. So I keep saying that we need to revise the security law, and the regulation authorities should only arrest the bad guys when things go wrong. And they shouldn't, and they're not capable to manage the things they shouldn't, and they don't have the expertise. I have been trying to promote this for a long time. So that's more from the regulation perspective. What about Fred, and you are an economist. For the China's financial system, short capital and long bank situation, what is your comments? I think Professor Gao has given very good comments on this. Now, this is to do with the history we have. We had the planned economy, and the banks are part of the whole system. And so this way, it's easier to manage and allocate the money. And now there is the market. There is multiple players in this market. And so the regulators and the decision makers, they feel concerned. They're concerned that the market may go out of control because there are so many unpredictable things in the market. So they're very nervous. Things like IPO, for example. If the market is not performing well, and they would strictly regulate the speed or number of IPOs. And this poses a huge impact on the market. And that's their perspective. And when the confidence is very low in the market, and if there is a good company that joins the market and to try to restore the confidence, then why not? So I think from the regulators, they are using the market for test and error. And that shows that they are seeing the market as an beast or a vicious animal, and they want to tame this animal. So unconsciously, they are using market as a tool for planned economy. They try to really control the market. For the issuance policy of IPO and also the access to the capital market. And it's very difficult to get the license. You know, for Columbia University Business School, and any of you students, whoever are interested in capital market, you can create a fund to do private fund or private or public fund. But in China, you cannot do that because there's few number of license. And in China, what is your registered capital? What is your AM? And they don't really look at your capabilities and your talent, your manpower. And they are more looking at this traditional index. So the market access is very difficult. And the best talents are having problems to join this sector. Now we are the second largest capital market with a sizable market, but in terms of the quality and liquidity, in terms of the variety, diversification of the products, I think we are still lagging far behind, and there's still huge space for further growth and development. So the market has developed for 30 years very rapidly. Still, it hasn't fully released the potential that our market has. And the biggest and most important solution is to give it more freedom, to respect more the capital market, because the international capital market have had hundreds of years of experience, and they have had so many painful but helpful learnings that we can refer and learn from. And whether it's the US or UK, they're not perfect, but there are so many lessons learned, and we should learn those lessons. Just like when you established the Chinese market, capital market 30 years ago, you were learning a lot from the Western capital market. We should respect that market more and give it more freedom and space. And I believe in the next couple of decades, both the numbers and sizes and quality of our market will be on par, if not better, than the US capital market. So what you're saying is that the Chinese capital market is not marketized enough. If there is more liberalism in the regulation, then there will be a more balanced share between banks and capital market, which means the capital market will be bigger and the banks will play less of a role. And this probably will be more beneficial for the capital market to service the market entities. The regulation should be more marketized. Is that what you mean? Yes. Okay.
My next question is for Madam Sun Wei again.
Hey, 伯米尔，我可不可以就这个问题回答一下？
Can I give
因为呢
my answer for your previous question too?
Yeah, because we have a view, and I think we've been talking about the imbalance of the direct and the indirect financing. And the U.S. number is 20% bank funding, 80% capital market funding. And in China, if you look at the number, actually, bond funding plus equity is already 53%. And that's the 2020 number. So the bank funding is still high, relatively speaking, is 47%. And Europe is 35% bank funding, somewhere between China and United States. So I'm going to be a little bit provocative here, because I think that we talk about the historical reason for this kind of bank funding lead financing model in China. But I may argue that actually it's not just because we have this kind of breakdown. It's not just because that the capital market in China is relatively young and there are a lot of reforms needs to take place, which is absolutely true. I'm going to argue that this status quo of the direct and indirect financing, I wouldn't say it's by design, but at least maybe one can argue it is a direct result of our economic growth model, because how China economy is growing, okay? Obviously, in the beginning, export driven, later investment driven, now it's trying to use consumption. And however, even though the consumption is picking up as the growth driver in the GDP growth, but the infrastructure financing, i.e. the investment-driven economy model, is core to the current state. I think, bank funding accounts for 70 to 75% of all this credit in China. So, there are a lot of concerns. There are a lot of concerns about this credit bubble. Is 296% of GDP. People think the bubble will burst. And but if we really look at the infrastructure financing, is done by only 17 banks. China has over 4,000 banks at different levels, but the bank financing is concentrated on the big banks, and they account for 70% of the overall bank credit. And not only that, these banks have a very healthy ROE and the Tier 1 capital ratio. So therefore, despite all the concerns and the noise globally about this debt bubble in China, we see a lot of good things coming out of this infrastructure investment and funding. It definitely creates a lot of efficiency in relocating resources and subsidizing private business and the household, even nowadays. And it provides affordable infrastructure services and improves living standards and support business development, and it creates business connectivities. It's both for manufacturing sectors as well as a service sector. And the best example is the high-speed train. right? With the investment China made with the availability of a speed train, and the government is effectively promoting a faster exchange of a capital and the service, and creates this kind of a connectivity to allow people to live in with one city and work in another, and to promote traveling, tourism. This in turn helps the consumption level. So therefore, I think my point is that maybe there is no rush for China to catch up with United States. And or maybe one can argue, is US model the right model for China?
I have to say something. Okay, Xiqing, the floor is yours.
Okay.
For this question, there are two aspects. First of all, I agree with Matt and Sun Wei to some extent about the concept that China has a different model. Of course, China has a different model, but the model is moving toward which direction and what kind of results will come from this direction? Well, the time is too short, it's too early to tell. And there is a very important topic here. We leverage national resources to do infrastructure. No problem. Around the globe, it has raised great attention, and we have great examples out of that, but we do have other problems. And from philosophy perspective, it's about elitism or nationalism. And there is an argument here. For the governance of the country, for the operation of the country's economic system, which way is better? In the few thousands of years, we all leverage elitism, whether it's in very old days or today, which means we can find talent who are capable, who are smart, though they are managing the society. But when it comes to country versus country competition, it has its strengths. Why the Qing Kingdom united the other six and very cruel management methods. But we do need more time to think. And more and more we see the nationalism or the populism, but we've never talked about it from a very rational perspective. Well, in the past, there has been quite some time for us to cross over the river by touching and feeling the stones at the riverbed. But now it's a different time. I do not want to share with you data. And speaking of data, structural-wise, we are different, but look at the results. We are super good. But the good timing so far has been very short. The Soviet Union in the 1930s made great effort, and the whole system, the industrialized system, was established, and the achievement was huge. And I did a study about it, and I used to work in a factory that was built by the Soviet Union, and their achievement was very impressive, but we still cannot avoid all kinds of problems coming out of it. And we from the academic, we are scholars, and we need to be super clear about it. We should never say China model is always good. We should stick to this model. No doubt the China model so far is very good, but we need to do a more in-depth discussion. That's all I have. I totally understand what you mean. It's about a more in-depth discussion about whether a marketization is better or a government-oriented is better, whether market is bigger or the role played by government is bigger. So today, let's leave alone this debate. Next, let's come to the market-related topics again. Capital market is developing very fast. and it's getting bigger and bigger very quickly. At the same time, we have a problem or issue. How can we make the market stronger? There is a big difference here. So how to make China's capital market stronger and have a more in-depth development of this market? And speaking of the institutional investors in this capital market, what is your proportion? If in China's capital market, well, 3 decades, in the first 10 years, no institutional investors, and you saw all the chaotic phenomenon, all the chaotic problems coming out of it. And Xiqing, at that time, Zhou Xiaochuan, president around the year of 2000, a president for CSRC at that time, and you were the vice president for CSRC. And the concept of developing institutional investor was raised at that time. You still remember that, right? And so far, the fund size has reached less than 60 trillion, including mutual fund and private fund. But compare with America, the fund size, it's already 200 trillion. So the gap is huge. So how can we further promote institutional investors? Because they have more reasoning. We need to bring reasoning into the capital market so that we can have a healthier market. So what is your opinion? And actually, this question has been touched upon just now. China does not have enough institutional investors, but for the past 3 decades, it's a very natural process to have more and more institutional investors. You see, the fund size has been much bigger than a couple of years ago, and the REIT has been promoted. So more and more people have realized that they want to gain the dividends from the development of the capital market. On the other hand, they realize that they are not capable enough to come to the market and just compete. So naturally, more and more people will come to realize that, especially in America. We see in America, there are some elite who think they are really smart, and they went to a Harvard school, they went to the Wall Street, and they acted like day trader, they did hedge. Very limited number of people. But most of people say, I buy mutual fund, I follow MK whatsoever. They've realized that there are things they just cannot do. And from a social perspective, the risk version, the appetite toward risk, on average, well, historically speaking, Chinese people, compared with other countries' people, have slightly higher preference toward risks, especially when you go to the gamble venues. More Chinese people gamble in casino than other countries' people. I never gamble, but I like to go to casinos to count. It seems that in Chinese people's blood, of course, we want to make a fortune. We love to take the risk it deserves to make a big fortune. So from this perspective, China's capital market, it seems that individuals outnumber institutional investors, but now more and more individual investors started to realize there is a difference. If we want to have more institutional investors, you need to allow them to establish institutions. You need to allow graduates from CBS, from Harvard, Yale, Princeton, Stanford. You need to allow these graduates to establish a fund company or a consultancy firm. We need to have easy access. And then we phase out the bad ones and we keep the good ones. But so far, the management mechanism, monitoring management is very stringent for some historical reasons. For example, in China, if you want to get a license for a fund company or security company, it's a very big thing. You need to spend a lot of money, but money is not enough. You need to spend a lot of time. So the existing institutions, well, we call it the bus theory. The people who are already in the bus don't have enough incentives to motivate them. But people not in the bus who are capable, who have great talents, cannot make it into the bus. So the market cannot be in a balanced status as it is supposed to. Well, as mentioned by Boming, we advocated the development of institutional investors, and there was some outcome coming out of it, and today's status is better than the past, but this is not enough. So I think it has something to do with the public governance. It has great to do with the confidence level of the regulatory bodies, if they are confident enough. For the fundamentals, if they only monitor the fundamentals, as they mentioned by Fred, which school you go to, what kind of education you've received, what kind of examinations you've taken. If you've satisfied the qualifications, I give you a license. If you are not capable, you will be phased out. But we today have a lot of non-market elements. For example, what kind of relationship you have, how much money you spend. It is very difficult for the market to truly reach the landscape that the institutional investors takes the lion's share. A lot of people ask me, why in China, when institutional investors come to China, they behave like individual investors? I say, well, it is logical. I mean, what they mean is the institutional investors sometimes behave just like individuals because they have no confidence regarding the certainty of the market or the public governance mechanism. Okay, understand. The time is almost up. So I give each of you 3 minutes. And China's capital market has undergone 3 decades. So look into the next decade, in which areas you see opportunities of breakthrough for China's capital market. So let's look forward to the next 10 years. What will be the market look like for the next 10 years? So management, please. Look into the future. You are muted, sorry. We cannot hear you.
You
are on mute.
Okay, sorry about that. This is a great topic about the future because I think we are very optimistic about the opportunities here. And I think if you look at the capital market, one of the most exciting thing is the acceleration of its opening up to international participants in these domestic markets. I think that, in fact, a lot has been done. A lot of people actually have not realized that the market has started to open up gradually, although slowly, but steadily. Starting from 2014, that we had the Shanghai Hong Kong Stock Connect, and then next year, the year after that is 2015, mutual recognition for the asset management companies between China and Hong Kong. That mechanism we established to allow Hong Kong mutual fund managers to sell certain products to China and vice versa. And then 2016, the year after that, is the Shenzhen Hong Kong Stock Connect. And then the 2017, we had the non-bond bond connect, and also the Shanghai London Stock Connect we established in 2019. So this is all very exciting, but I think it's not enough because we just talk about the issues with the market and the lack of the institution participation. And I think one of the very effective way of addressing this problem is to introduce the international players, and not just the security firms like Morgan Stanley, but also the insurance companies, the pension funds, and these are the things that I'm happy to see that actually is happening. And I think last year, a few initiatives have been put in place which allow Morgan Stanley and a firm like us, including Goldman Sachs and JP Morgan and other and UBS, to really own 100% of our security joint ventures. And also the insurance space is opening up. So we also have Allianz, for instance, that got 100% license to be operating in China. I think the ownership is very critical for foreign companies to really maintain control of their operations and to further expand their business in China by getting more licenses to develop a full-blown business in capital market. I think with the foreign participation, such as us and also BlackRock, Fidelity, and no doubt that will definitely help with the institutional investor participation. And the other thing that is a landmark is the Msci Inclusion. I mean, at the early stage, people were saying this was actually less influential and less effective than people thought because of the a small and a gradual index inclusion factor. When it just started, it was only 5%. But by the end of 2019, it's 20%. So now I think over the longer term, we hope that we expect MSCI inclusion will increase to 100%. This is actually critically important because this encourages foreign investors to really increase their exposure into the under-invested asset class, and i.e. the A-share class.
Fred, 3 minutes. Just now, Madam Wei talked about internationalization in the future. What is your perspective? I agree that China's capital market needs to be more open in order to be mature. And in the next 10 years, the reform in the capital market has a lot to do. And just now we talk about the list system. It's been appealed for so many years, but hasn't been realized yet. So we cannot get further delay.
You refer to the registration base. Yeah, I think this should be more marketized to make it really convenient for the investors as well as insurance bodies. And there's no need to create these unreasonable barriers. Only by doing so, the capital market can really play a more important role for financing and supporting the businesses to grow. I think the next 10 years will be more derivative tools. Now we're more talking about shares, bonds, and equity. For a mature and sophisticated market, it should just have the cash. There will be more derivatives and more bond derivatives, foreign exchanges, as well as futures. And right now, it's not matching with the position that China has on the world level. And it's not very good for risk control. I have one more minute. And M&A, Laura and me, and we were asking for M&A laws and regulations. And we would like to have those to help companies and industries to digest excess overcapacity and to accelerate the pace of M&A. In the US, the stock market is huge and the M&A is very strong in US as well. And China is in desperate need of this M&A between listed companies, but there's still a long way to go. And I think by 2018, according to my model, China's GDP will surpass that of US. And if the capital market stays proportionally developed as GDP growth, and the market cap in the GDP reaches to the same share of that of US, and then in 10 years' time, China's capital market will be bigger than the US capital market. So I hope that today's regulators and the policy makers should act as the officials in 30 years ago should act with a vision and ambitious, and also really use the next 10 years, which is the prime time for the growth of China's capital market. And I believe with that effort, the Chinese capital market will grow into the largest market with the best quality. Okay, Professor Gao, please tell us what your thoughts are for the capital market in the next 10 years. Both Song Wei and Fred have said a lot of which I all agree. But I'm not as optimistic as Fred. And I believe Fred would have a very good model, and I don't doubt your numbers. But one doubt I do have is that in terms of number, China capital markets overtaking US is for sure to happen. However, the quality of our market compared with theirs, I think it's going to take more than 10 years to really overtake that in terms of quality. So I'm cautiously optimistic. Looking at the trends today, the public governance and the regulation system are becoming better. And what I've noticed in recent years is our Vice Premier Liu He, as well as the new chairman, president of this commission. They have really included three important things. The first one is legalization and internationalization and marketization. And these are what can help to guarantee the quality of the market. Having a law is different from legalization. Although we already have all these laws and regulations, and the laws and regulations we have are even more in number and more complicated than those of developed markets. But this rule of law, or is it rule by law? That's very important. In the last couple of years, the CSRC is moving towards the rule of law direction, which I'm very happy to see. But we also need to stick to marketization. Liu He said, no intervention. No intervention means market, let market decide. Even you are smart people, you may still fail because market is huge. We need to respect the market, let the market play its role instead of you trying to drive where the market is going to develop. And the third one is internationalization. And of course, this is what we are wishing for, but it will depend on the global and environment and landscape. At least our regulators today do wish to internationalize, but the international environment may not always allow you to go that way. And if these 3 points are what we need to stick to, and if we manage to do that, I believe the Chinese capital market will be on the right track. For the institutional investors, they would love to have a more mature market, because if it's ruled by law and market will be more predictable, then they will not do something that a retail or individual investor would do. And for China, these retail investors, they say that we are not mature. But I think the Chinese retail investors are the most smart ones. They're so smart. And when I talk to them, I realize that they study the capital market and different economic theories and the cycles in the world. And they have so much knowledge about the capital market. So our retail investors, they are becoming more educated, and they will have a better understanding of the market as time goes by. So if those 3 points are stuck to, both institutional and retail investors will become more sophisticated. And I believe in 10 years' time, the Chinese capital market will be much better than today, a much bigger size with a much improved quality. But of course, I prefer us to focus more on the quality than the quantity. Okay, thank you very much, our panelists. And we would like our market to be more legalized and marketized and internationalized. Thank you very much, everyone, for your input. We've had a good discussion on the past of our capital market, the present, as well as the future. So I'll give the floor back to our conference organizer.